Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is Triple Witching Friday. It only happens 4 times throughout the year. Basically, volatility has put a chokehold on the general markets. I'll talk about that a little bit more when we look at the VIX. But first, let's start with the Dow Jones Industrial Average ETF, ticker symbol DIA. If you recall from last week's report, I introduced the moving average crossover using the Jim Rawbach method, and I hope you had a chance to watch that. If not, I'll add a link to last week's report in the description box below. But what that basically means is when the market or a stock closes below the 20-period moving average, we get a sell signal. And you can see here that the Thinkorswim platform that I'm using, I have the Jim Rawbach method already programmed. If you're a Thinkorswim trader and you have that Schwab platform, then we can send you this layout so you don't have to program it. It'll include the arrows up and down, and then you could just save it to your own trading platform. So just call us or email, and we'll send that out right to you. Again, we can also put a link in the description box for you to copy and paste that. That might be a little bit easier for you. But anyway, on Tuesday, we got the red arrow cross below the 20-period moving average. And then Wednesday, it continued lower. Thursday, we had the holiday. And today, as you can see, the candle continues to be red. Even though we closed slightly higher, that's a red candle. And look down below what's happening with the volume. The volume is increasing on the way down. Remember, volume increasing on the way down is bearish. Down below, you see the oscillators are still continuing lower. There is a good chance that will come down to fill that gap. And if that happens, we could see a little bit of a bounce in this area right around 419 on DIA. So stand by for that. I think we could even see an ABCD zigzag pattern on the way down, moving us lower each and every time. So the bears are very happy with the way the markets closed this week. If we look at IWM, you can see here that we didn't quite cross below that 20-period moving average, at least not yet. But there is a good chance we'll see that happen on Monday. Why do I say that? Well, if I zoom in here, you'll see that most recently the CCI has crossed below the momentum line. And when that happens, we generally get 2 to 4 days of downward momentum as the CCI crosses below the zero line, or also known as the momentum line. So the pressure is on. And if you take a look here, we might even have a head and shoulders pattern forming, with this being the shoulder. Here's the head. If we get a pivot lower next week, and I think we will, we'll see the right shoulder, with this all being the neckline. And once the neckline breaks, we'll generally move to the height of the pattern. So in other words, you take the height from the neckline to the head, attach that to the breakout point, and that's generally where you set your targets when you're trading the head and shoulder pattern. Now, I do have longer term downside targets in place. You see here each week, I keep them with the red dotted line. You could read that off as I go through these charts, but I'm giving more short-term outlook or short-term trading targets for the swing traders out there. Now, if you stick to the end, I will be talking about the trade of the week. We had a really nice trade in ACI this week. I'll show you how we even apply the moving average crossover to that type of trading. I'll talk about Bitcoin. I'll talk about silver as well. So stay tuned. All right, so that's IWM. Looking at QQQ, what happened here? Well, we got another big red candle. Look at the volume down below. It is increasing on the way down. We did get the cross below the zero line on the CCI. That should be your best friend, by the way. If you're not using the CCI, I would encourage you to put it on your platform and keep an eye on that. It's not hard to read. When it crosses below the red line, which is the plus 100 mark, that's a sell signal. When it crosses below the black line, it means that the momentum is continuing. And if it crosses below the green line, down there, it is oversold. And then once you cross back above the green line, it now turns to a buy signal. So I think we'll go a little bit lower next week. I also believe that we're going to see an increase in volatility. That usually happens the week after options expiration Friday. So stay tuned for that. It's going to be an interesting week next week. Okay, looking at SPY, what do we have here? We've got the cross. You see that red arrow? That means that the market today closed below that 20-period moving average. It's been a long time since that happened. When was the last time we had a red arrow? Back here in March. And so look what happened after the price closed below that moving average, and after that red arrow showed up, we continued much lower before we got this big, massive bullish engulfing candle. So that is a warning sign. If you're long the market, you most definitely want to protect any of those profits to capture that. You don't want to turn winners into losers, and you definitely want to minimize the loss. If it really starts going against you, you don't want to suffer a catastrophic loss. It's always good to use good risk management strategy. In fact, we promote the 1% rule for managing risk. If you want to sign up for a 15-day free membership, you could go into our stickytrades.com university, and we have a video that highlights the 1% rule for managing risk. It's the most important thing you can learn if you're trading these markets. Okay, so longer term downside target on SPY is way down here. You've got that at 450. So I'm keeping that in place for the longer term traders and investors. And it's going to be an interesting ride lower. I'm still extremely bearish long term, but we do take long positions during the course of the week, but we're very much on guard. We take our profits very quickly when the profits come to us. We don't turn winners into losers, and we are option traders mainly. Speaking of options, let's talk about the trade of the week. On June 11th, a mere 9 days ago, we bought the October 17th $22 calls on ACI for $1. Now keep in mind, we don't try to hit home runs right out of the gate. We do get home runs every now and then, but we really are focused on getting singles, doubles, triples, and doing it in a consistent way. If you take a look at ACI, you'll see right here on that little candle right there, that's known as a hammer. Right there, see the hammer? It's a small body candle with a long shadow. The CCI was moving up, very close to a buy signal. The stochastic was moving up. We had the drop in volume the previous day, which tells us the sellers were losing momentum. And so we bought the calls on that day. Take a look at what's happened since. Now, again, I'm focusing on that 20-day moving average crossover. Today, on Friday, this Friday, June 20th, options expiration day, we got to close over that 20-period moving average. So that's looking really good for our option traders. That's a bullish signal. We did get a cross over that zero line or the momentum line. So we were talking about that earlier. And that's how we trade options. Keep in mind that 15-day free trial includes the trade publications that go out and all of the recordings, including the webinars. So you can come on these webinars, ask me questions live. If you can't make them live, you go to the member page and you pick up the recordings and you can take notes from there. Okay, now let's talk a little bit about the VIX. I do have a longer-term upside target at 36.85. I can guarantee you the VIX will one day get up there because that's an open gap. All gaps on the VIX fill. That's 100% guarantee there. The big question is when. We don't know when, but look down at that green arrow. You see that? We had that green arrow show up last week. We now have a hammer candle right here. Long shadow is very bullish. And this also looks very much like a cup and handle. Here's the cup. The handle is forming. If we break out of the rim, or also known as the brim of the cup, we will generally go up to the level that is showing between the brim and the depth of the cup. So in other words, if we break out over the brim, we're going to travel up to a distance that equals what we see down here. So we could see short-term rally on the VIX up to 28. And again, that's going to be very interesting for the option traders, especially because a rally in the VIX would mean a downturn in the S&P. That's generally what we see. For the most part, they're inversely related. Okay, now what could add to this volatility, you have to be very careful, because today Donald Trump presided over the national security meeting on Iran. This was released by Reuters about 3 hours ago. And you have to understand something, that we are in the midst of the fog of war. What is that? Well, you have to understand that there's going to be a lot of propaganda going out. We don't know if it's true. It could be true. Maybe it is true. Maybe it's totally false. But you don't want to inform or give away anything to the enemy that's going to give them an advantage. You want to keep them in the dark. Go read The Art of War and you'll understand what I'm talking about. So whatever happened today in that meeting will be kept top secret, and we'll have to see how this unfolds. But it's certainly not looking good for the general markets, especially for oil. If you look at /CL, this is the light sweet crude oil futures. You can see that we had a vertical move here since all this has unfolded. And we had very close to a bullish engulfing candle today on higher volume. So I do think it could go a little bit higher, but I also can see a pullback. This is a Fibonacci pullback level of around 66, 68. Now, we're not playing oil to the short side. We're not trading CVX, ExxonMobil. We're not trading OIH. But there will be a time that I think that it will be right for us to get into an option trade. And if I do get in, the members, of course, get that first. And then after we take our profits, or as we're getting close to taking profits, I generally give that out on the free YouTube channel. We can't give away the secrets that the members pay for. Yeah, I hope you understand that. So what we're looking at here is a possible continued rally. We have to see what happens with Iran. There is a resistance area, a pretty heavy resistance area up here on crude at 77.5. But when you look at Bitcoin, and I'm going to talk about Bitcoin and also silver, you have to understand that Bitcoin is selling off, and we have this, again, cross below the 20-period moving average with another red candle here that is a bearish engulfing on higher volume. So we actually have a position in BITI, right, which is the inverse relationship to Bitcoin. You could trade Bitcoin two ways. You can go short it by buying BITI, or you can go long it if you're trading BITO. And if you look at BITI, we have the green arrow buy signal, BITO, which is going to be in line with Bitcoin, is already continued lower after it got the red arrow back here a while ago. So this moving average is now acting as resistance. So if you're interested in trading Bitcoin, whether it be through the ETFs or outright, again, that's part of our membership. We'll show you how to do that, and we'll show you how to do that while managing risk using the 1% rule like I mentioned before. Now, looking at SLV, I see a pretty interesting gap, but not only is that a gap, but this is an island top. An island top is when you have a stock or a commodity or futures, whatever it may be, it gaps up and then it gaps down, and it gaps right through the previous gap. So that's exactly what happened. That's very bearish when that happens, and it's very bullish when it happens on the downside. You can see here is an island bottom. See what I'm talking about? We had the gap down, and it never filled the gap. It just traded right through the gap, leaving this island formation. Here's another one. Here was an island top. Look what happened after the island top. It took a nosedive here. So we could see the same thing happening. Now, this area down here below the green dotted line is my area of interest. I'm looking to buy SLV in that area. So if you follow me on X and use hashtag AJSLV trades, I will notify the public and my followers on X to when I'm getting back in. And I usually give everyone a 5-minute heads up. So in other words, I don't trade ahead of the crowd. I give the crowd a chance to trade ahead of me. I just like it better that way. And it gives you a slight advantage of being able to get in before I make the trade. All right, so that hopefully that's helpful for you. Now, next Wednesday, I've changed the format up a little bit. Instead of constantly giving you targets on Wednesday and Friday, what I'm going to do is I'm going to lean more heavily into Wednesday being an educational video, like what we did with the moving average crossover. Next Wednesday, I will be talking about MOBO bands. MOBO bands were created by my good friend David Elliott, who has sadly passed from cancer, but his legacy lives on through the trading platforms. MOBO bands are embedded in the Thinkorswim platform, and I'll show you how to use those, especially you momentum traders out there. If you like the 20-period moving average crossover method, you're absolutely going to love MOBO bands. MOBO bands, by the way, stand for momentum breakout. Momentum, B-O, breakout. And it uses Bollinger Bands, but in a slightly different way, where John Bollinger, his whole concept was mean reversion, right? Moving the stock back to the mean. MOBO bands are, once you get to the mean, you generally trade through the mean and you continue with that pendulum effect and go the other way. I'll talk more about that on Wednesday. So make sure you hit the like button, the subscribe button. And most importantly, we got a report from YouTube that not many people have hit that notification bell. That notification bell is very important because it tells you when the videos are being published to YouTube. And I think that's going to be a great help for you because we don't bombard people with video after video after video. I put out 2 videos a week. Sometimes we'll put out 3 if it's a special report, or maybe if Andrew Faldy puts out a report through Sticky Trades. But we do not bombard you, so it's not going to be a menace in any way, shape, or form. Just hit that notification bell at the top of the page, and we love to see you come back and watch more of these videos. So thank you, folks, for watching. Have a great weekend, and I'll talk to you on Wednesday. So long.